What's going on, family? What's going on, family? What's going on? Definitely was just muted, literally for the past 10 seconds, but we are live right now, and I'm super excited, super happy and grateful to be here with every single one of y'all. But you guys know the routine, you guys know the vibes. Go ahead and drop those locations in the chizzy chat, because we're gonna have another phenomenal session tonight, phenomenal stream. We do got a few things to talk about today. That hopefully can just provide some more insight for you guys on really what it takes to trade profitably, and really become a full-time trader. So go ahead and drop those locations, family. Drop those locations, and we're gonna go ahead and really get into it tonight, and take a look at the markets and see what the markets ultimately did and how they reacted and responded to the data that actually came out today. Because we did have some interesting news that was released that I want to talk to you guys about, obviously, because you guys know I'm very big on fundamentals and sentimental analysis. But I definitely want to go ahead and break that down with you guys so you guys can get my thoughts and my opinions on what happened and why it occurred. And then hopefully it just continues to provide you guys with a lot of insight and a lot of value overall, family. So shout out to every single one of y'all that's tuning in with your boy right now. Shout out to every single one of y'all that's with me. I appreciate y'all. I love you guys. And again, hopefully I'm able to give you guys a little bit more insight. That's really my goal, guys. Every single stream that I do, every single session that I host, the goal is literally just to provide some type of value, right? Whether it's just one piece of nugget, one gem that I could give y'all that can just give you a little bit more insight, that's all I'm really after, right? So hopefully I'm able to do that for you guys today, to give you guys a little more insight, a little bit more value that you guys can go ahead and utilize to really help out with your trading. But let me see who we got in the building today. Shout out to boy Kyle. I appreciate you, Kyle. You are the first person to comment on the stream. I appreciate you. Thank you so much for actually being the first. Again, the first one that shows up. I will eventually actually start doing something where I host a live stream, a private Zoom call, actually not a live, but a private Zoom call with every single person that is, the first person to actually comment on the stream, for the course of the week, each 5 days. I'm going to eventually do, or I only go live 3 days, right? So each 3 days, those 3 people that are the first person to actually comment, I will eventually start doing a Zoom call with you guys, just to give you guys more so of a question and answer opportunity, and just give you guys an opportunity to really just ask and just watch me really analyze the markets as well in a more deeper perspective. So big shout out to you, Kyle. I appreciate you. Right, I see we got big Noti gang in the building. Shout out to all my Noti gang members. I see y'all. We got Las Vegas in the house. What's going on, Sam? Good to see you in the chat. We got Riverside, California, Noti gang. I see y'all. LA in the house. Avondale, Arizona, Vermont, Baltimore, Maryland in the building. What is going on? We got Malaysia in the house. What is up? What is up? You was right about the last night about the dollar. I made 60 pips. Let's go, Mozart. That's what I love to see. I absolutely love it. I want to join your course. How much I could pay? Well, I don't have no course as of right now. I probably won't be coming out with my own specific course or academy until next year. The goal right now for me to actually release an academy or an actual more in-depth course or academy is going to be not till probably February. Or I actually want to do something very big for my birthday. And it's crazy, and this is how selfless I am, right? For my birthday, I want to give you guys the opportunity to be a part of something that's going to be, massive, right? And that's going to be probably my academy. So as of right now, I don't have that. But what I do have is the boot camp. We just had our last boot camp last week, and I'm not going to talk too much about it, because I don't want every single stream that I do to be more of me promoting these things, because I really want this to be straight value more than anything. But I also understand that a lot of you guys do want more in-depth trainings. So I do talk about it just, for very brief moments. But, I did host a boot camp last week that was absolutely next level information I was giving out. I am planning on hosting another boot camp in August 15th through the 19th. It's going to be very in-depth as well. We have 5 days, minimum of 2 hours each day, or around 2 hours each day. And it's me just pretty much showing you guys exactly what it takes from a structural perspective, from a mindset perspective, from a habit creation perspective, from a risk management perspective, from a technical perspective, from every perspective, right? Like, we really go in depth on that boot camp. So if you want to have access for that, the price right now is I think it's $289 to actually be a part of the boot camp, which is actually extremely cheap. But that price is only going to remain the same until the end of this month. Once this month is over, the beginning of August 1st, the price will go up $100 minimum. So just be mindful of that for anybody that is serious about, you know, continuing their education, and for anybody that is, you know, looking for a little bit more structure, a little bit more guidance on how to really do this. And I highly recommend you to go ahead and take advantage of the boot camp. Again, it will be absolutely next level, and I promise you'll get your money's worth. Probably in just, I mean, the first day you'll probably get your money's worth, because the, you know, day number one, I'm pretty sure anybody that was on the boot camp that I held last week, you guys can all attest to, you know, the fact that day number one was next level. All right, not just from, you know, obviously going over a lot of mindset perspective, but really just the you know, the focus on more so creating positive habits, and really just understanding, you know, everything that it really takes. Right. So, you know, again, I'm not gonna force you. You know, this is only for people that truly want to go to the next level with their trading journey. You know, this is only gonna be for people that are serious about this. If you're not serious about trading just yet, if you're more curious than serious, then I highly recommend you just continue watching these live streams. These are free. And yeah, you know, and then hopefully when you do become a little bit more serious, then, you know, the boot camps will possibly be, you know, available for you. All right, so that's just a little, you know, a little rundown. If you are interested, description of this video, there is a form that you have to fill out, and once you fill out that form, and if you're ready to lock in your spot, do it ASAP, so that you can go ahead and make sure that you are going to be a part of the next one. So that's that. Right, but let's go ahead and see who else we got in the building today. I see we got Canada in the building. What is going on, Lisa? Good to see you. How are you doing? Right, we got Tampa, Florida in the house. We got Fort Lauderdale in the building. I'll actually be out there in Fort Lauderdale / Miami area this weekend. This past weekend, I was in Jersey for a baby shower. Right, went out there with the family. This weekend coming up, I'm going to be out there in Miami for another baby shower. It's like everybody's having baby showers back to back to back. But I will be out there in Miami this weekend as well, which is going to be pretty lit. Good vibes, me and my wife out there. So yeah. But I see we got San Antonio, Texas in the house. We got Phoenix in the building. What is up? What is up? He ain't lying. That boot camp was amazing. Boot camp was full of value. I appreciate all y'all that was actually participated in that first one. And again, tomorrow we do have, again, keep in mind, tomorrow we do have day number 6. Because I actually added a bonus day. Right? I actually added a bonus day, you know, for the boot camp for everybody that participated in the first one, because there was still a bunch of things that I could have, you know, went more in depth on. Right, I structured out the boot camp in a specific way, and I really tried to stay to that structure to the T. But there was still something that I really left out that I'm not gonna say I shouldn't have, right? But there's something that I really just want to go ahead and talk to you guys about, and that's gonna be more so based on entries and all that good stuff, right? Which is obviously very, very important. So tomorrow, for all you guys that were a part of the boot camp, make sure that you guys are aware. I did not send the email out just yet on the details, but just a hint, it will be at the same exact time that the original boot camp was at, 7 p.m. Eastern, and it will be on the same exact Zoom link and everything, right? So it's all going to be on the same exact information, the same exact Zoom link. So make sure that you guys, if you guys were a part of the boot camp, to go ahead and make sure to show up with me tomorrow at 7 p.m. so that we can get that final session in. Which again is going to be really mainly on just focusing on entries and knowing where and when and why you should be entering in the market. So that's going to be another banger. It will be recorded. I'm not sure if I'm going to create a PowerPoint. I'll probably just go ahead and just really analyze real time markets with you guys, just so it's more so easier, because I can create PowerPoints and stuff like that and just have that structure, which is cool. But I also want to just show you guys real-time examples of why and how the market can really react and why it could, you know, do a certain thing. So, but overall, you know, who knows, right? Who knows? We'll figure it out. I'll probably figure it out tonight on exactly how I want to do it. But I do know exactly what I'm going to talk about with you guys, and I know it's going to be next level, right? So, but let's see what else we got here. We got Ohio in the building. We got Puerto Rico in the house. What's going on, Puerto Rico? I appreciate y'all out there in Puerto Rico. We got the boot in the building. We got Bahamas in the house as well. I appreciate y'all. So let's go ahead and take a look at what actually happened today. So we did actually have some very interesting news that got released. You know, we had PMI information for the pound that got released. Now, again, just keep in mind, guys, right now the pound itself, you know, it might actually have a ton of volatility behind it, just because there's a lot happening over there in the UK. You know, there's actually been around 30 to 40, something like that, governmental officials that actually resigned. And there's actually a big thing happening where the prime minister might literally probably get voted out, if that's even possible, right? So there's a lot of chaos, guys, from a political perspective happening over there in the UK. And whenever there's things like that, guys, where, you know, the people that are making the decisions are pretty much not on the same page, that can definitely cause a lot of chaos and a lot of fear and uncertainty in the markets for sure. And the pound might be influenced because of all that stuff. So that's just something to be very, very mindful, guys, if you guys are trading the pound, which I know a lot of y'all love pound yen. So just keep that in mind. There's a lot of stuff happening over there in the UK, and that could influence the currency as a whole. Right, but we did have PMI data get released, and we also had JOLTS job openings come out at 10 a.m. Eastern. Obviously, the job openings is definitely a very important one that a lot of traders and a lot of investors are paying attention to, because jobs and employments, guys, is a leading indicator of how an economy can be doing. Right, when we have strong job numbers, when we have a lot of people that are employed, that's typically looked at as good for the economy, because that's going to stimulate the economy. Right, when people are employed, they're going to get paid, and when they get paid, they're going to spend that money to go ahead and continue to boost the economy as a whole. But what we just seen right here, guys, is we actually just seen more openings that were actually expected. Right, so they were forecasting around 11 million jobs that were actually looking for employment, right, looking to hire people, and it actually came out almost 250,000 higher than what they were actually expecting. Now, it is less than what actually came out last month, but it did come out higher. Now, I've been telling you guys about, in my opinion at least, how the employment and the unemployment data and all this stuff eventually is going to go. I truly believe, guys, that we're going to continue to see an increase in job openings as we continue to deal with inflation, as we continue to deal with the rising of interest rates. I do believe we're going to continue to see a lot more jobs become a lot more available. And the thing about it is, they're going to become more available, but it's not going to be like that employers are actually going to be looking to fill these jobs, right? Because now we're dealing with, again, a lot of these businesses, guys, because of inflation, because of interest rates going up, the profit margins for a lot of these businesses are now starting to decrease. And a way for them to try to cut costs is, for one, to probably cut off marketing and things like that, but for two, is to actually start laying off people, right? To actually start firing people. So you're going to start to see a lot of people actually become unemployed very, very soon, and you're going to start to see the unemployment rate actually start to rise very, very soon. Probably within the next couple months, you'll actually start to see that across the board. And it's literally going to be because of everything that we're experiencing right now, right? Like, inflation really is a big thing, and it's really causing a big number. But, it's not even just the inflation. It's how the Federal Reserve is acting and responding to inflation, which is also causing, a lot of these things to actually occur. I've been a big, I'm not going to say a supporter, right? But I've been talking about it for a while now, guys, that I feel like the craziness hasn't even really started yet, right? Like, the actual recession that we're pretty much already in hasn't even really started yet, right? Because technically, we're not in a real recession just yet, technically speaking, right? But once these actual numbers get released near the end of the month, then we're actually going to really be confirmed in a recession. But I think too many people are really underestimating, especially, in our government and Jerome Powell and his team. They're completely underestimating, guys, exactly what we're about to go through. We're going to go through a crazy period in time where there's going to be a lot of hurt occurring, right? And it's better for us to be aware of these things, right? But let's take a look at this real quick, right? Now that we're actually talking about recessions, guys. So this right here is an actual release, that actually comes out from the Federal Reserve Bank of Atlanta, which is a branch of the Federal Reserve. Obviously, it's a big deal, and this pretty much just gives a prediction, guys, on what GDP is actually going to come out as. As of right now, the latest estimate for GDP, guys, which came out at the beginning of this month, which again was the end of quarter 2 and the beginning of quarter 3, it's literally coming out negative, right? We're talking about coming out at negative 2.1%. So if the numbers do come out just like how I was expecting, which is going to be probably very, very close to that, if not right on par, then we are officially going to be in that recession, right? Again, what constitutes a recession? I want you guys to answer that in the chat. Especially for anybody that's been on my calls long enough, on my sessions, on my streams, you guys should know the answer to this, right? Like, what is going to be a textbook recession? Right? What is a textbook recession? Right? Like, what is considered a textbook version of even though I feel like we already been in a recession, technically we haven't been in because this hasn't happened. But what is a textbook version of a recession? Exactly. 2 back-to-back negative GDP results, right? Back-to-back, yep. More than 2 negative quarters, 2 consecutive quarters, right? Yeah, exactly. So what classifies us as being in a recession is 2 quarters, right? Which quarter 1 we came out negative, right? We had negative growth. GDP, guys, just measures the growth of an economy. Okay, when we want to see, say, a strong economy, you want to see obviously GDP continue to increase. But right now, because of everything that we're dealing with, we're probably going to continue to see the opposite, where GDP is actually going to start to decrease. And that's what happened quarter 1. Quarter 1, we had a decrease in GDP where it came out negative. Quarter 2, which just ended, the estimates right now are that it's going to come out negative as well. And that is what's going to signal a recession, the fact that we are actually in a recession. And this is important, right? Because now, once it actually does get confirmed that a recession is here, then the Federal Reserve can't continue to beat around the bush, and they're going to have to be a lot more aggressive in their approach to try to, really combat not just inflation now, but try to combat and get us out of this recession that's about to happen. My unprofessional guess, and I say unprofessional because I'm not no economist, I'm not somebody that obviously went to school for none of this. I'm just somebody that's been using a lot of research on my own and just listening to other people that do a lot of research. So my unprofessional opinion is that this recession is probably going to last a lot longer than people are thinking. Right? We're talking about not just seeing 2 quarters of negative growth, but we're talking about maybe 4, 5, 6, 7 quarters of negative growth occurring over here in not just the US, but even across the entire world. And that's going to tremendously affect, guys, every single one of us, right? Whether you want to believe it or not, it really is, because now the Federal Reserve is going to have to, and not just the Federal Reserve, but even the government, they're going to have to try to, act and be aggressive in certain ways that is going to really affect all of us. But overall, as of right now, right, we are expecting negative growth. I mean, look at the chart right here, right? Like, this chart is absolutely just tanking and just falling off the face of the earth right now, right? And this is just a chart showing, what GDP pretty much is projected to be at. So it's about to get crazy, right? It's about to get crazy. Again, we've been talking about it for a while now. It looks like now is finally about to be that time where we do actually go ahead and get that confirmation of a recession. All right, so that's just something we have to be aware of. It's also going in line with, obviously, jobs opening up. Now, on Friday, right, and I am going to talk about the few things. Actually, let's just go in order, right? So tomorrow, guys, as well, we do have some very important news. We have this one right here at the start of the day, 7:30 a.m. for the euro. The ECB publishes account of monetary policy meeting. This is pretty much like the euro's version of the FOMC meeting minutes that we had today. Which the meeting minutes, guys, pretty much was just talking about what was actually spoken about in last meeting that happened. And I'm gonna be honest, I didn't really dive too much into that. So I'm aware of bits and pieces of what was actually spoken about, but not the entire thing, right? And I don't want to talk on things that I'm not too confident on. So, I'm just going to be chilling on that. But overall, this right here, guys, this release that comes out tomorrow morning for the euro is pretty much the equivalent of what this one actually was as well, right? Where, their central bank, the head of the central bank over there is pretty much going to talk about exactly what their plans are and what they think is actually happening. And all these type of meetings like this, guys, right? This one, FOMC meeting minutes, right? The ECB publishes account of monetary policy meeting, right? These are very important for traders and investors. Like, very, very important for traders and investors, because this is what helps us create sentiment overall, right? So even like tonight, I'm probably going to take some time tonight to actually really read in depth on this meeting minutes, just so that I'm fully aware of what was actually said, so that I can continue to get sentiment. I'm pretty much already positive that I know exactly what was talking about, right? So, but I definitely want to just confirm that. But again, tomorrow we could expect some volatility for the euro early morning because of this, right? Because of this, and obviously if we can get the an understanding of what is said and create sentiment off of that, that can help us out for sure. At 8:15, we do have the ADP version of non-farm employment change. We could see some type of moment for that. Usually, you don't see too much craziness off of this in general, but it is there, right? It's something we have to be aware of. One thing I'm going to be really focused on tomorrow, guys, is going to be the initial jobless claims. All right, again, this is something that has to do with employment, and depending on how this number actually comes out, it could really cause a lot more chaos, a lot more fear in the world. right? So I'm gonna be very, very interested to see what's happening here. You know, they are forecasting 228,000, right, new individuals that actually filed for unemployment. So depending on how this actually comes out, as you know, it's going to be very interesting to see what we really, or how the market actually reacts from that. As of right now, they're expecting, you know, 230,000, right, people to file unemployment for the first time. I would not be surprised if it actually does start to come out higher. I'm actually expecting this number to continue to increase as the months come on, and that's just going to be giving a negative impact to the economy as a whole. So that's going to be very interesting. And then obviously on Friday is going to be probably the most important one, in my opinion. It's going to be the non-farm payrolls, right? And then the unemployment rate. Again, I'm expecting the unemployment rate to go higher. Non-farm payrolls as well. I'm expecting this number to possibly miss on projections as well, all right? So this is going to be interesting. I think we're going to see a drop in this number personally, right? I think we're going to see a drop in this number. So overall, they are expecting a massive drop off from the last month. So overall, guys, it's just looking bad right now. You know, overall, it's just looking bad for the economy. So, you know, we got to be aware of these things and be ready to react. Let's see what we got here. That doesn't mean a downside dollar, though, right? I mean, it really depends, Tony Pip Savage, right? That's a good question, by the way. For the state of where we're at now, right? Typically, when we have a lot of chaos and fear, and especially when we're talking about times of inflation, and not just times of inflation, but times with recession, what do you feel more comfortable investing in, right? And this is a question for everybody that we have to really understand. Because when I first started trading, guys, I used to completely look at fundamentals the wrong way. When I would look at, say, a negative release, right? Like, hypothetically speaking, let's talk about, say, the unemployment rate, right? Whenever I would look at this and I'll say, man, the unemployment rate actually came out higher, that's typically looked at as what? Bad for the economy, right? Because typically a strong economy has low unemployment. So when a number that does miss tremendously, and let's just say hypothetically this comes out at 3.7, 3.8, 3.9, that's usually looked at as bad for the economy, okay? But what we have to be able to do is separate the economy and the actual currency, because during times of downturn in the economy, usually the actual currency can actually benefit. Now, why do you guys think that is? And I know there's some of you guys that already know this answer, especially if you've been really paying attention to me, because we've been talking about this, right? But if we have negative data that comes out, that is usually going to cause the economy, right? The actual, and when I say the economy, I'm talking about overall the asset market, right? The equities market, right? You know, things like the stock market, the index market, the crypto market. When we have data that's coming out as bad for the economy as a whole, that's usually going to cause those assets to actually decline, right? To lose value. But as those assets are losing value because people are either liquidating, getting out, cashing out, whatever the case may be, what could happen for the dollar, right? The dollar itself can actually increase in value because now, based off this negative data, investors and traders have to do what? They have to decide on if they want to continue to stay invested into the riskier assets or if they want to go ahead and invest into more of a safe haven. So when negative data gets released, yeah, we're going to see the stock market continue to drop. We're going to see the crypto market continue to drop. We're going to see the housing market drop, right? A lot of these quote-unquote riskier plays, we should see those drop. But the reason why those are dropping is because now people are liquidating those assets and they're going back into cash, right? They're going back and sitting on cash, right? And when they're sitting on cash and the demand for the dollar starts to increase, that is also going to cause the dollar to increase, right? How is this making sense, family? Drop some threes in the chat, right? And big shout out to Nicholas, right, our newest subscriber. I appreciate you. Welcome to the family. But drop some threes if this is making sense, guys, right? So when we have negative data come out, we'll see a decline in the stock market overall because that's going to cause fear. That's going to cause uncertainty. That's going to cause doubt. But with all that fear, uncertainty, and doubt, traders and investors are also now liquidating those assets so that they don't continue to see a decline in their portfolio, and they're going to go towards a more safe haven type of play. And when they go to a safe haven type of play, guess what is considered a safe haven? Especially right now, the granddaddy of all safe havens is the US dollar. So typically when chaos, uncertainty, and doubt and fear happens in the market, that calls for more demand for safe havens, aka the US dollar. Okay, so that's why the dollar has been absolutely on fire for the past year, because there's been so much demand to go to a safe haven type of play like the dollar, as opposed to literally staying in the stock market with all this inflationary fears and all this recession talks, all that stuff on the horizon. No real trader and investor is going to want to deal with that, and is going to want to risk their portfolio to continue to decrease during all that chaos. That's why we see so many people going into the dollar, right? Investing, and not even just investing, but pretty much hoarding their dollars, right? And just sitting on cash. Why? Because during a market crash is when cash is king, right? Cash is king only when there is talks of a recession on the horizon. Okay, that is it, right? Cash is king when there's a lot of fear, uncertainty, and doubt in the world, which is what we have right now. Otherwise than that, if it wasn't this much fear, if inflation wasn't as high as it is, if we weren't dealing with talks of a recession, then yeah, nobody's gonna want to just sit on cash, because you're not able to grow off that. You're not making no money off of just sitting on cash, right? But again, it's just all about really understanding of where we're at in terms of the state of the economy and things like that. So that's just a way to look at it, guys. Overall, again, don't be like me personally, where anytime I would have negative data come out, I would typically always assume that the currency is also going to be negative. And I realized that now, looking back, that every time I used to try to trade, the currency off of negative data, it never really went in the way that I expected it, right? Now, I'm not saying it always happens like that, but more times than not, it's literally just a battle on what the investors and what the traders are going to do. Are they going to stay invested into the riskier plays, or are they going to be more so invested into the safe havens? That's it, right? Either one or the other, okay? So overall, though, that's going to be very, very interesting for sure to see what actually those data and what that data actually comes out as, guys, coming into tomorrow. All right, so let's go ahead and see what happened overall for pretty much the past day, guys, for the dollar. Right, we really didn't see too much. I mean, we did see obviously the dollar go ahead and break this high, right, and create a new high here for the day. So we've seen a little spike up, overall. Again, I'm very, very bullish the dollar. We actually did see a lot of momentum come into play, and I'm still very, very much still, bullish the dollar itself. It's just a matter of if we want to take advantage of certain opportunities, when and where could we actually do that, right? Now, obviously, I don't trade the dollar itself, the DXY. That's not something that I trade, but I utilize it as a reference point for me personally. Because it is the granddaddy of all currencies, right? If this is dropping, then it's pretty much getting weak, right? And that means that a lot of the other currencies across the board are possibly gaining strength against the dollar, because the dollar is now becoming extremely weak, and vice versa, right? If the dollar is actually increasing, or I believe the dollar is going to increase in value, increase in strength, then that's pretty much going to say that every other currency, for the most part, is also going to lose value against the dollar, right? So overall, very interesting to see what we're doing. Again, we are trading, guys, at literally multiple decade highs here for the dollar. We haven't seen the dollar, guys, in this high since 2017, and then obviously back in 2020 when COVID really picked up. We've seen a nice quick spike, but we're pretty much trading in like no man's land right now, right? And it's very hard to really trade when we're trading in no man's land, because we don't have no type of structure to reference. Only thing that we could pretty much just rely on now is, let me go ahead and look at these other. All right, so if I look at it from this one right here, right, the Trading View Actual Dollar Index, like now we could look to the left and really start. Now we have structure that we could try to identify. All right, and now that I'm actually looking at this, we do have an area of structure, guys, that's pretty interesting, right? We do have a very strong supply zone that we're pretty much trading into right now as we actually speak, right? Where we seen price, for the dollar absolutely just collapse, right, from literally back in 2002 all the way down to around 2008. All right, now very interesting question here, right? Look at this. All the way from, realistically, the high is up here, right, which happened in 2002, all the way down to 2008. Now, what happened in 2008? And why did the demand for the dollar actually pick up in 2008? This is a very, very, very simple question, by the way, right? But it really just, again, reiterates, guys, what I was just talking about in terms of how the demand for the safe haven increases during times of chaos. So what happened in 2008? Let's see, what happens if stocks become cheaper than bonds? Does that affect sentiment at all? I heard something about that. That's a very good question, by the way, right? That is a good question. What happens if stocks become cheaper than bonds? That's gonna be very hard to do, right? Because if you're talking about the overall, like the S&P 500 or something like that, where those are like buckets, like those are baskets in this. Those are indices that hold baskets of different currencies. Then that's a good question, right? I'm gonna look into that a lot more for you. I got you, 20 Pip Savage, right? I'll look into that and see if I can give you, because honestly, if I'm being honest, that's a question that I don't even have an answer for. So I'm not even gonna try to make nothing up. Let's see, housing market, yeah, exactly. Stock market crash. It was the housing market crash, but it did affect obviously the stock market for sure. In 08, the whales took their shorts from the housing market bubble and reinvested in the markets. Yep. In 2008, there was a Great Depression. Yep, exactly. Wall Street crash. Yep, exactly, guys. So in 2008 is when the housing market, pretty much the bubble, literally popped, right? And that bubble popping in the housing market ended up leading to not just the housing, housing market itself collapsing, but the stock market collapsing. That was literally when we had, again, the Great Depression. So again, look what happened though, right? 2008 that occurred, and what happened for the dollar? The demand for the dollar started to pick up. Why? Because there was so much fear and uncertainty in the markets at that time that people did not trust the stock market. People did not, trust the housing market. People did not, trust a lot of these more riskier assets. So instead of them actually, being invested into these riskier plays, they were like, nope, let me go ahead and just sit on cash. Right? I'd rather sit on cash instead of trying to, continue to ride these crazy markets down. Again, guys, back in 2008, like there's a lot of big time, hedge funds and banks that literally went bankrupt and are not here today. So there was a lot of chaos that actually occurred. But this also just proves the point, guys, on how the demand for the dollar really picks up when we do go through crazy periods in time. I mean, that was literally the last time that we actually had like a quote unquote recession, and it actually was more so of a depression, right? So now that we're actually talking about it again, and now that we're literally about to be confirmed once it releases on the 27th or the 28th of this month, when the actual GDP numbers get released, the demand for the dollar is only going to continue, right? So now, yeah, we're at a very strong level of supply right now, and if for whatever reason we do see a short-term pullback, that's, in my opinion, is going to be short-lived, right? I really think at this point we could potentially, right? Again, this is potential. This is my opinion, by the way, right? Literally is my opinion. But at this point, we could probably even realistically see price, really make it up all the way up to around the 116 to 120 level here for, the dollar, right? Just because the demand for the dollar is only going to continue to increase. So I'm still seeing a lot more upside here, guys, for, the dollar as a whole. Even if we do see more so of a short-term pullback in the market, which again, the market, it might happen, it might not. I don't think we're going to see nothing too crazy of a pullback. Personally, there's too much happening. But if we do see some short-term pullbacks, I think it's going to be short-lived. And I believe we're going to just continue having a lot more momentum or a lot more higher probability just continuing to buy the dollar as a whole. All right, so that's just my opinion on that, guys. Overall, I still see a lot more upside. There's just a lot of happening, right? So we're talking about, let's break this down, right? We're talking about dollar demand through the roof, right? That's exactly what we're seeing right now, right? Dollar demand is through the roof, right? What we're also experiencing right now, right, is us going through QT, right? I'm not going to spell it out because I can't spell, right? But we're also going through the process of QT, right? Quantitative tightening, right? What quantitative tightening does, guys, it removes the supply, it eliminates the supply of the dollar, right? Because right now, what the Federal Reserve does is that they actually purchase a lot of debt, right? The Federal Reserve, guys, purchases a lot of the government's debt, and they do that, and that increases their balance sheet as well. But right now, through the process of QT, quantitative tightening, now they're actually starting to reduce their actual balance sheet, right? So let's actually go ahead and and see if we could bring this up, right? So you guys can see it, right? Recent balance sheets trends. I want to see the actual balance sheet. So look at this right here, right? So right now, this is again really right on the Federal Reserve website, which where anybody, like all of us, have access to this, right? This is all public information, by the way, right? But if we really look at this right here, guys, like this was 2019 before COVID, right? Our actual balance sheet had around 3.8. I would say I think there's more so billions of, this might be in trillions of dollars actually, right? So we had around 3.9 trillions of dollars on our actual balance sheet. But because of COVID and because of all the stimulus packages that they gave out, and I'm not talking about stimulus just to the individuals, right? Because everybody got $1,200 here, $1,200 there. But even for them giving out stimulus packages to the government and the government having to bail out, a lot of banks and a lot of corporations, this pretty much, brought our balance sheet from 3.7, 3.8, all the way up to around 9, right? Like literally right short of $9 trillion on the balance sheet, right? And this in itself is literally the biggest reason why we're experiencing inflation right now. Like literally, right? People are like, man, why is inflation going so crazy? I mean, look at how much money they added to the balance sheet. Like, and if we really bring up, right, the actual monetary supply as well, like we can really get into it. All right, let's see if I could find the actual monetary supply. All right, the M2, here it is. All right, if we really look at the actual monetary supply that was actually created as well, like this is again something that literally measures the supply of money over here in the US. Like again, 2019 came and they didn't just, I mean, it's always going up, right? The Fed is always printing money all the time, right? Because they don't have in their eyes, there's nothing wrong with them doing it, especially if they have to make decisions and bail out certain corporations. But look at how drastically this completely just shot up, right? Like this is like overall for the past 30, 40 years, yeah, it's been going up, but it's been very gradual until 2019 hits, COVID hits, and then this thing just takes a sharp spike up to the upside. So on top of us printing all that money, on top of us purchasing all this debt, right, the Federal Reserve, that's why we're experiencing some rapid inflation, which I don't think is going to come down anytime soon. In fact, guys, we have CPI coming out next week, which measures inflation, and it's expected to actually come out higher, right? It's expected to come out at around 8.8% year over year. We're talking about inflation could realistically be, 9, 10%, 11% by the end of the year. And it's literally because of a combination of them continuing to add assets to their balance sheet, buying all this debt, and also them adding literally, I mean, a fourth of all the money supply and circulation, literally adding over the past few years. So with all this being said, by the way, right, because this might sound like a completely different language to a lot of you guys, because it did for me for the longest as well, right? But with that said, right, if we look at this right now, right, we're actually seeing a downturn. Whoops. Let me go ahead and let me see, May, right? So if we actually look at this now, though, guys, we are finally starting to see a downturn here in the actual how much they're actually, or the supply of money itself. Like we finally, looks like back in March is where we finally plateaued, and it looks like we actually might start to see, the supply of money starting to get decreased, right? Which is again done because of quantitative tightening. Now the other thing that we're also seeing as well is also, right, with them reducing their balance sheet, right? They're literally removing $90 billion, right, worth of assets literally off the table, right? So as these, these government bonds and these mortgage-backed securities that they've been buying, right, all this quote-unquote debt that they're buying, once it actually matures, normally what they will do when it matures, they're taking that money and reinvesting it into more debt. But now, because they're going through the process of quantitative tightening, they're not reinvesting it. They're just taking that money that they're getting now, and they're literally just taking it out of circulation. So the whole point of me bringing all this up, guys, is now that we have the dollar's demand is completely through the roof, and it doesn't look like it's going to slow down. Now, because of the process of quantitative tightening, which is again simply just removing the supply of the dollar, right? We're literally taking money out of circulation. What should we, like, from a common sense supply and demand type of perspective, what should that do for the actual currency as a whole? That, like, we literally broke this stuff down, right? Like, we literally broke this stuff down from the monetary supply, from the actual balance sheet. Like, what should that do for the actual demand Or what should that do for the actual currency itself? Like, we're talking about the demand continuing to increase for the dollar, right? But the supply now is actually starting to decrease. Basic supply and demand states when the demand for an assets either stays the same or it starts to increase, right? It means there's more of a demand for it, but the supply starts to actually decrease. That's very simply stating that the price of that asset is going to go up. And that goes for any asset, right? That's just looking like, let's use the housing market that we experienced over the past 2 years as a good example, right? I mean, houses, guys, were selling literally this year, the beginning of this year, it was going crazy where houses were selling 20, 30, 40, 50% above ask. Why is that? It's because the demand for housing was so high, because interest rates were so low, mortgage rates were so low, so it caused, because all these rates were so low, the demand was through the roof, but the supply wasn't that much. There wasn't that many houses available. We're talking about houses will go on the market and sell within a week. We haven't seen that, and I mean, again, I'm not that old, but we haven't seen that in a while. So because that type of demand was there, the demand for the houses were there, the supply wasn't as readily available. That's why the housing market absolutely went crazy and prices were going through the roof. Same exact thing is what we're experiencing now for the actual US dollar. The demand for the dollar is through the roof because people are looking for those safe haven type of plays. But now the supply is starting to actually decrease. So we should expect the value of the dollar to continue to increase as well. Oh man, is this making sense, family, or am I just talking to myself right now? Is this making some type of sense? Right? Because once I really started to understand this stuff, that's when my trading really went through the roof. That's when my trading absolutely went flying. Because now I understand that this currency market that we're trading, the Forex market, guys, is literally ran based off supply and demand. Literally. Because when we're trading is a zero-sum game. Right? It's a two-part process, right? If I want to buy something, if I want to buy EURUSD, then somebody else also is taking the flip side, right? Very simple. Supply and demand is really what's controlling this game. So if the demand for the dollar continues to stay the same or continues to increase because of all this chaos, then there's no reason for us to really expect this thing to reverse just yet. At least not yet. Maybe when we start to see inflation turn around, when we start to see CPI numbers start to reverse, maybe when we start to see GDP get back to zero, right, starts to actually see some type of growth, maybe when there's some type of optimism back in the markets, then yeah, we can start to expect, obviously, you know, the demand for the dollar starting to decrease. But as of right now, it doesn't make sense. It doesn't make sense, right? We want to continue to expect this to continue to increase over time. Very simple. Right, so I'm expecting more upside here for the dollar overall. Okay, it's just a matter of where and when we're actually going to go ahead and give us an opportunity to get involved. But like I said, I don't trade the actual dollar index. I just use it as a reference. So let's actually go ahead and take a look at a few assets and see what we got going on here. Right, and gold has been very, very interesting. Right, like I've actually been expecting gold to finally start to fly and act like a safe haven. But it has literally been doing the exact opposite. Right? Gold is another asset, guys, just like the dollar, right, that typically gains a lot of value during times of chaos, uncertainty, and all this fear and this doubt that we have in the market. Like gold typically does, but as of lately, it has not, at least against the dollar. This just really shows you, right, like this in itself, really looking how gold is reacting against the dollar itself, really shows you guys the demand for the dollar and how strong that demand really is. Because even things like gold, which typically, historically does phenomenal during recessions, even this isn't doing that good. And that just shows you guys how strong the demand for the dollar really is. So there's no reason for us to try to go against that, right? We want to go with the path of least resistance, and thinking long-term bullishness or thinking that most assets are going to continue to lose value against the dollar is probably the best way to go. So overall, gold, guys, like I said, at very interesting levels. Even if we do see a pullback at this point, it's very hard for me to say, oh man, yeah, we could start flying when we haven't had no evidence of that just yet, right? Typically, yeah, we would want to see gold absolutely start to rebound and go higher. That would be amazing, right? Typically, in a more traditional world, that's usually what would happen. Right now, though, we haven't seen no evidence of that, right? Ever since all this chaos and all this uncertainty and all this inflation talk really occurred, I mean, look at this, right? March 22 of this year, March, 2002 or 22, like, we ended up spiking up above 2,000, but yet this thing completely started to catapult even lower, right? Once inflation really started to increase and once we started to raise rates, this thing actually started doing the opposite of what it traditionally normally does, which is usually, actually increase. And it's because it's going against the dollar. So overall, at this point, I think we're just probably going to continue to either potentially see more downside, which is kind of crazy to say. And it is probably risky to even say that, but still, I mean, the evidence shows that we've been just, we haven't been able to sustain against the dollar. So I'm just expecting possibly more downside. Now, how can we take advantage of something like this if that was the case? Right? Well, we have to look for areas of supply. Right? When we are looking to short the market, we look for areas of supply to short the market from, right? AKA areas of structure, right? So we have an area of supply right there. We have an area of supply right here. Right now, the cool thing about the boot camp, right? Like if you guys were on the boot camp, we actually really broke down supply, and we literally broke down like a 3-part process on how to really identify supply from the highest buyer or the highest seller, the common consensus point. Like we went a little bit in depth on some supply and demand on the bootcamp, which is absolutely next level, right? But overall, we won't keep it simple here. But yeah, you want to look for areas of supply, right, where we clearly had a lot of supply enter the market, which devalued the actual asset against this actual dollar. So overall, if we see price really start to pull back up, which is possible, right, an opportunity to get involved will probably be somewhere near this area of supply. And if that one does not hold and we actually break that level, then that supply zone will now turn into a flip zone, right? And that flip zone we can utilize as an area to go ahead and ride us up into the next area of supply. Right? Very simple ways of trading this market, guys, is literally trading the markets from supply zone to demand zone or demand zone to supply zone. Like literally, that's like the best way to really trade this market. Trading it from zone to zone, supply and demand zone to the supply and demand zone. That's like the easiest way to do it. So very simple. We can either, let me just reiterate that one more time. We have this area of supply right here, which we could potentially see a reaction from. Send price lower from right there. Very possible, right? Again, supply. How do we know this is a supply zone? Because we've seen massive increase in momentum. Big shout out to our newest subscribers. I appreciate y'all. I love you guys. Welcome to the family, right? But looking at how the market reacted from this area, clearly we had a lot of people selling gold, right? Selling gold for the dollar, which added to the supply of gold, but the demand wasn't there for that amount of supply that was added, which made the market fall. So because of this reaction, family that was on the boot camp, what can we expect, or why should we be expecting another sell-off from up here? Right? I know my guy Kyle knows. All right, shout out to that boy Kyle. Right? But why should we expect, right? Like, why should we expect a potential sell-off or a reaction off of this supply zone? Who knows? This is good, by the way. This is good. This is good. We're in a downtrend. I mean, yeah, definitely. That plays a part into it. Leftover liquidity, yeah. That's definitely a part of it for sure. Where have we seen it in the past? Yeah. Right, but you got to think about it, guys, right? So when we sold off here, right, we had orders that were filled to short the market. There we go, 20 pips average. Right, so whenever we do see price come back up here, we want to automatically, we have to assume it. Right, we don't know that it's actually going to happen, but we have to assume that when price does come back up to this level, that there are unfilled orders that would want to get filled when price comes up into this price point. Because we have to really start looking at the market, guys, from a premium versus discounted levels, right? Discounted price points. We have to understand the difference between these, right? Premium and discounted price points. If right now the play, right, that most traders and investors are doing is selling gold, if that's the play, are you going to try to sell gold at a premium or are you going to sell it at a discount? I don't know about y'all, but again, I'm here to make money, right? And so are all the traders and so are the biggest investors in the world. So are you going to be selling something at a premium to make money, or are you going to sell it at a discount and potentially lose money? What do you guys think? Premium or discount? What do you guys? What would you guys do? All right, if you guys were sitting on a ton of gold and you did not feel safe about gold and you wanted to convert that gold into the dollar, are you going to sell it at a premium or a discounted price? Unfilled orders. Exactly, right? You're not going to want to sell it down here at a discount. You're going to want to sell it at a premium, back at a supply zone. That's why we have to assume that there's probably a lot of unfilled orders up in this supply zone, because nobody's going to want to sell it at a discount. They're going to want to sell it at a good price at least, and that's going to be at a premium. Premium pricing comes in as supply zones. So yeah, we had a ton of orders that were filled here, right? But because of the volatility behind it, there was probably a lot of unfilled orders left behind. Okay? And all these unfilled orders that are left behind will probably get triggered, and we should see an initial reaction. Because now people that are already in gold, they're going to want to sell it at a premium. Oh my God, this is some sauce, guys. This is some sauce, man. Oh man. I wish I knew this stuff when I got started trading. All right, so overall, yeah. Well, if price comes up, we should expect a reaction. Now, again, remember what I said, though. Flip zones. If we don't get the reaction and we actually see price break the supply zone, that supply zone now ends up becoming a demand zone, right? Because in order for price, and this is some sauce right here, pay attention, right? In order for price to actually break a supply zone, you have to understand the amount of demand that has to pick in, right? The amount of demand that has to pick up, right? There has to be a lot of demand for price to actually break a supply zone. So if that demand is so strong that we actually break a supply zone, then guess what? That zone now turns into a flip zone, and we can use that same exact zone to catch the next move up to our next supply zone. Oh my God, guys. Like I said, I wish I had this information when I started. Is this making sense? There are some threes in the chat. This is making sense. I know it is, right? It has to. Because I really try to make it as easily to understand as possible. Hello, an off-topic question. Will you be selling the recording of your boot camp? That's actually a good question, Elliot. That's actually a question I've been getting a lot, too. Like, a lot of you guys want to actually buy the recordings of the boot camp, which I don't mind selling it. Right, I really don't. It's definitely going to be a little bit more, though, than what everybody else paid for. That was actually a part of it. But yeah, I am probably going to be reselling the actual recordings of the boot camp, probably sometime either next week or the following week. I'm not really sure just yet. That's definitely really not at the top of my priority just yet, but I will probably eventually sell the recordings for sure sometime in the future. Right, so it's either you can get the recording of the first boot camp, or you could just participate in the second boot camp, August 15th through the 19th. All right, so yeah, this is where we're at, guys. Very simple. Supply and demand is probably the best way to really trade these markets by far. And another thing about supply and demand zones that I love, that I really, really love about trading supply and demand zones, R to R. Right, the risk to reward is always phenomenal when you're trading off supply and demand zones. Every single time. Why? Because you're literally getting in at the high of a market for a sell, and you're getting in at the low of a market for a buy. So when you trade off of actual supply and demand zones, you're always going to get great risk to reward every single time. If we were to say enter this market up here, guess what? We're going to target back down to these lows. Initially, these lows probably even lower, but that in itself is a 3.5 to 1 risk to reward. That's not bad. That's risking 2% to go for 6%. I'll do that every single day, every single chance I get. So that's another positive, right? Now let's really get a little bit more. I want to get a little bit more in depth with you guys, right? And this is going to be some of the stuff that I do talk about on the boot camp, but I'm going to go obviously a lot more in depth. This is what I'm actually going to talk about for tomorrow, right? For all you guys that are on the day number 6 tomorrow, talking about structure and entry and what to identify. This is pretty much what I'm going to talk to you guys about. Some of it, right? I'm going to talk to you guys obviously a lot more, but and a lot more in depth. But let's really break this stuff down now, right? Now let's bring up the concepts of smart money, all right? Because smart money concepts is probably one of the most popular, ways of trading from a technical perspective. Smart money concepts is definitely, something that has really improved my trading for sure as well. Because now I'm able to really be aware of supply and demand a lot more when you really understand things from a smart money concept perspective. But let's really talk about that real quick, right? So when we're thinking about smart money concepts, guys, right? Big shout out to Charles. I appreciate you. Welcome to the family, newest subscriber, right? Miguel Angel, what's going on? Shout out to you as well, newest subscriber, right? But when we're thinking about smart money concepts, guys, there's really going to be a couple patterns that you really want to understand, right? The traditional way of really looking at market structure patterns was this. What do we consider this right here? What is this pattern right here? Right? Who knows what this pattern is right there? We all do, right? Did we go over GJ yet? Not yet. I got you, Erkin. Right, I got you. Yeah. Right, very simple. This is a double top, right? Everybody and their mama knows this pattern. Everybody and your dog knows this pattern, right? Everybody knows this pattern. This is very easy to identify. And that's also it's a reason why we have to be aware of it too. Now we also have the flip of that, this pattern. All right? W formation, double bottom formation. These patterns are usually what most newer traders love to trade off of. Now, I'm not saying that these patterns don't work, because yeah, there are times where you get a double bottom and a double top, and it actually does play out. There are times when that happens, right? Especially when you're in a super strong trend, right? When you're in a super strong trend, there are times where those actually do play out. But this is the patterns that I want you guys to really start being aware of, right? This is and again, there's way more patterns than this, but right, retail entry patterns. Okay. And now let's go ahead and break down again I'm not going to get too in depth, like I said. All right, I'm gonna leave it for the boot camp for tomorrow for all you guys that are going to be on it. All right, because there's actually 3 different ways that from a smart money perspective that we really look for entries off of. 3 specific things that we look for. All right, but we're going to keep it simple. right? We have retail entry patterns. It's very simple, M and W. There are other ones, right? Other patterns out there. But then we got smart money entry patterns. And yeah, we got the traditional double top, but we also got the spike above before we go ahead and continue. Okay? That's the traditional M pattern from a smart money perspective. And then we also got the double bottom, but then we also got the spike below, the rundown below liquidity, capture liquidity before we see the move up. Okay? Now, this is how I want you guys to really start thinking about the markets. Why? Because this actually does happen pretty often, right? Where we see that M formation be created, right? Something like this. A lot of traders, they see that M formation created. They start to enter sells on the closure of the second leg. Once we get a rejection up there on that second leg, everybody and their mama starting to jump in. And yeah, you can catch a little bit of the move, but you're not going to catch the entirety of the move that we should or could be looking for. Why? Because now all you're doing is you're starting to create areas of liquidity, pockets of liquidity, right? And those pockets of liquidity and those areas of liquidity, guys, guess what? Those are literally areas that are created literally to entice you to do the exact same things that you guys are doing. Again, remember what I said earlier, right? Trading is a zero-sum game, right? So it's literally a game between the buyers versus the sellers. And what the biggest institutions in the world do is they literally convince you guys to think that the market is going to go one way or another so that they can create a pool of liquidity so that they can go ahead and either enter or get out of their positions while using you as leverage to do that. Oh my God. Oh my God. I hope you guys got that, what I just said. Right? Trading, again, is a game versus buyers versus the sellers. And although this game also doesn't just entail, obviously, it's not just the banks trying to target just us retail traders, but the banks are also targeting other banks. Right? So just like how certain moves are created to entice us to do certain things, it's not just for us. It's also against other hedge funds and other large banks and other institutions as well. But these patterns, guys, these double tops and these double bottoms are easily the most manipulated patterns out there because it's the easiest one for people to get emotional about, and it's the easiest one for people to go ahead and make a decision on. So yeah, you got to be very, very careful of this. Now, what I love to do, and this is actually one of my favorite patterns to look for, is these smart money entry patterns. And when I say smart money entry patterns, I'm more so just looking at what's actually occurring, right? And being able to read this price action. The biggest thing that I really like, especially, and again, this is the key thing about this, right? This is some sauce, by the way. This is the key thing about this, right? Look for this pattern in key levels. These two patterns, the smart money entry patterns, you want to look for those in key areas. High levels of structure, high levels of supply and demand, right? Key areas. You want to identify these questions, or not these questions, but these patterns, right? So if I'm saying at a strong level, let's just say hypothetically speaking, right, this pattern right here, you know, this opportunity to sell, shorting opportunity, right, is found at a very strong level of resistance. So guess what I would do, right? I see the double top be created. Big shout out to you, Jamin. Shout out to you for being our newest subscriber. I appreciate you. Right, so when we see the market come up, when we see the market create this level of structure, right? Yeah, if you're gonna take this entry on the second leg, you better know where your stop loss gotta go, right? You better have your stop loss in the correct spot so that you do avoid the run on liquidity, because it's probably gonna happen. But this is what I really like, right? I love to, and I usually expect to run on liquidity because I'm always thinking again that there is going to be liquidity. Liquidity is, how is liquidity created? Your stop losses, right? Any type of trade management that we do in these markets, guys, creates liquidity, right? So whether it's us entering a trade, us pending orders, us positioning our stop losses, all that adds to liquidity, right? So when we have this area of liquidity being created because everybody's putting their stop loss up here, we're more times than not going to get a run on that liquidity because the price is really attracted towards areas of liquidity more than anything. And then when we get that grab of liquidity, then we see price actually go ahead and shift back below this level. This is what I love to see. I love this. I see this, guys, more times than not. I'm in this trade 1,000% of the time, right? Because now we've seen price actually break this high, break this level of structure, enter into an area of liquidity or enter into an area of supply, and then we see price immediately reject from it, immediately react from that, and immediately get us right back below this level of structure. When I see that occur on the retest, I'm taking that all day long. Every single time that I see that, I'm taking that 100 out of 100 times, especially if we're at, again, a key level of resistance or a key level of supply, right? Especially if we are already in a downtrending market, I'm taking this 100% of the time. So if we see something like, say, again, just using examples, right? If we see price come down like this, something like this, right? Downtrend, and then we start to create structure, right? Create this pocket of liquidity. Price runs up, grabs that liquidity, and then we end up breaking back a low. I'm taking this sell all day long if I don't get the entry up here, right? And it's the flip side as well for the uptrend, right? Literally the flip side for the uptrend. Let's say we're in an uptrending market. We see a strong push up, right? Big shout out to Antoine. What's going on? Welcome to our family. I appreciate you for being our newest subscriber. But even if, say, we're in an uptrend, we see price create the double bottom, right? You should start to expect that there is a potential liquidity down there and that we could see a run on liquidity. And then from there, once we run that liquidity and we come back above price, above this structure point, if you did not get an initial entry down here, this is your initial entry to go ahead and ride that move up. Sauce. Now, again, so I'm excited for you guys tomorrow because we're going to break down 3 different ways that you guys can actually take advantage of this, right? And what to look for when you guys are taking advantage of this. Okay? That's going to be probably the most exciting part about this whole thing, is really being able to identify these things and really being able to understand exactly what's going on. Oh, man. But from a pattern perspective, let's really stop looking at these type of patterns, right? The obvious ones, because again, if it's obvious, then it's obvious to everyone. And when it's obvious to everyone, we have to be very mindful of that, right? So let's not look at these patterns. Let's start looking at these patterns, because these are the ones that are really going to give us the best opportunity to actually catch a nice move, a long-term move, a long-term trade. Okay. Big shout outs to Kayleese. I appreciate you for the super chat. Thank you so much for the $4.99. Let's see what you said. Maybe gold is like that because they found basically the same amount of gold in Uganda. Didn't hurt. Also, USDCAD chart. Yes, I got you right now. I actually did hear that as well, right? Where, they actually found a massive supply of gold over there in Uganda, and that could definitely be playing around with this, right? That could definitely be a reason why gold has absolutely tanked. That could be a very, 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 very reason why. 100% it can, right? But let's go ahead and take a look at USDCAD, because you did actually drop the super chat. So whatever you want, I got you, right? So USDCAD is also very interesting. Again, I do expect this to probably continue to go to the upside. It's just a matter of seeing if we're gonna get more of a correction first. And I do think we will see a correction. If we do see a correction, and obviously we have this area of demand all the way down here at these lows, because overall all we have, guys, right now is pretty much all this clean traffic, right? From where this wick is right here at this low of this range all the way down to here. That's just clean traffic, right? Like literally a whole bunch of clean traffic that eventually will get filled, right? All of this right here, guys, is price. And again, another way to say it is price inefficiency, right? Price inefficiency usually gets filled so that we have a lot more efficient price action actually occurring. Now, why is it price inefficiency? Because we had literally one side of the actual spectrum completely dominating, right? The buyers were fully in control right here, which sent USDCAD flying. Now, again, like I told you guys with supply and demand, what could we expect next, right? Well, again, we had a lot of demand for USDCAD down here, which sent price flying. So if you wanted to buy an asset, are you guys going to buy it at a premium? Or are you guys going to be more so comfortable buying it at a discount? Let me know in the chats because I'm confused. Teach me something. Right, for USDCAD, where we seen price absolutely fly, the demand was clearly through the roof for the dollar against the CAD. And if you wanted to get involved, are you going to buy it at a premium? Or are you going to buy it at a discount? There we go, Rob. There we go, Robert. Exactly. Right? You want to buy it at a discount. Right? Again, when you want to buy something, and if you are an investor, you usually want to buy something at a discount. When you want to sell something, you're going to sell it at a premium. So when we are in an uptrending market, and this is some sauce, guys. Oh my God. I get so excited when I teach. I hope you guys can feel my passion, right? I really love this. Like I really love doing this, right? Which is why, I was teaching live literally for the past 4 years for my previous company, right? Because I really love this. Because this shit just, it blows my mind how crazy this is, right? But when you are in a buying market, when you are in an uptrending market, and you know it's an uptrend, you better buy the discounted pricing. Stop buying at premium levels. It makes no sense. Right? Stop buying at premiums. When we are in a clear uptrending market, we buy at discounts. That's how we make money. That's like me going to a garage sale, right? Buying a piece of art that normally at market is selling for $150 and I'm buying it at $160. How can I make money on that? I can't. Right? That's like me buying a house right now at the top of this market, right? Me buying a brand new house for $1 million right now, right? And the actual market value of the house is $1 million. I can't resell that for $1 million. I'm here to make money. Same thing with trading. So in an uptrend, make sure that you are buying at discounted levels. In a downtrend, make sure that you're selling at premium levels. Oh man, is this making sense, fam? I keep on asking you guys if it's making sense because I gotta make sure it's making sense to y'all. Because if it doesn't make sense, then I gotta try to dumb it down a little bit more. Drop some threes in the chat if this is making sense. And I really say this in the most humble way possible. But I really feel like there's nobody teaching better than me. There might be better traders out there than me. And that's fine, right? It is what it is. But ain't nobody teaching better than me. All right. So again, in an uptrending market, what do we do? In an uptrend, what do we do? Do we buy premium or discount levels? I gotta ask you guys one more time. Yep, exactly. You buy at a discount in an uptrending market. No questions asked. In a downtrending market, In a downtrend, what do? Do we buy at a discount or not buy, right? In a downtrend, we sell. Do we sell at a discount or do we sell at a premium? Let me know. Because the thing about it is, guys, especially the way that I trade, basically off of price action, market structure, supply and demand, all right, it all ties in together. Exactly, right? In a downtrend, we sell at a premium. So, speaking on USDCAD, right now, is USDCAD currently at a premium price level or is it at a discounted price level? Let me know. Is USDCAD at a premium, selling at a premium at right now, or is it at a discount? What is USDCAD currently at based off what we're seeing here? Is it at a premium price level or a discounted price level? There we go. There we go. USDCAD is currently at a premium. Now, is this an uptrending market? I mean, this is more so very choppy right now, right? But is this current move right here more so uptrending or downtrending? Because if it is, then we have to know exactly what we're doing, right? USDCAD is currently at a premium price level. Now, why is that? Because all the people that bought down here, right, they bought USDCAD. What's the price point right here? Right, smart money, big money bought USDCAD down here at 1.285. Right, they bought it at 1.285, which caused price to go up. So guess what? Since they bought it down here at what they considered it to be a discount, now they're able to go ahead and liquidate their assets at a premium. You don't want to be on the other side of this, because while a lot of people are also trying to possibly buy this and try to ride this buy up because they're not understanding the concepts that we're talking about, all the smart money that bought down here, they're now starting to get out up here. They bought at a discount, they're exiting at a premium. You do not want to be their exit volume, right? Because there's a lot of traders right now that are trying to buy USDCAD right now. All they're being treated as is as exit volume for everybody that bought at a discount. People bought at a discount. All right, let's say me. I bought USDCAD at $1.28. I'm selling USDCAD at $1.30. That's easy money. And I know it's easy money because also I know all the people up here are probably going to continue to look buy. So now I'm able to liquidate and get out very quickly. We want to buy at a discount, right? Specifically, a discount is going to be somewhere back in a demand zone. So if price does come back down for USDCAD, I would love for it to reach around the 1.29 level, possibly even a 1.28, and then from there we can go ahead and experience more upside. But guess what's going to happen? People are going to get trapped. Now watch this. Remember the patterns that we talked about from a smart money perspective, right? If price does end up breaking this level, guess what? We do have levels of structure right here. Watch this. Watch. Yeah, if you guys are getting massive value, I know you guys are getting massive value right here, right? Because I'm going in right now, right? Drop a like on the video. Please go ahead and smash the like button, only if you've gotten value so far, right? But look at this, right? So now guess what? We do have an area of structure here. So guess what the market makers are probably going to do? They're probably going to come to this level, give us a reaction off of there. What are they going to create? A double bottom or some type of pattern like that. Right, they're going to create some type of pattern to do what? To entice you to actually go ahead and jump in too soon. And as you're over here trying to buy off of this level, all right, we're good. All right, yeah, we're good. All right, I wanted to make sure this thing had disconnected for a second. Right, so now what they're going to do is probably go here, react off of this level of support. Right, previous resistance turns into newfound support, right? Blah blah blah. This is all very basic stuff that we're taught. But now what's going to happen is they're going to use the same exact area of support because everybody's taught the same exact bull crap. They're going to use this area to go ahead and create that double bottom. Guess what's going to happen, right? When we create this double bottom, what's going to happen? What's going to happen, right? This is done to entice you to actually go ahead and jump in. And when we actually do get that enticement to occur, then price is going to go ahead and run this low to go ahead and stop you out the markets, to then go ahead and really make the bigger move happen. Are you guys going to get trapped now, or are you guys going to be able to identify these type of traps that the market creates? Because again, I'm really showing you guys exactly how this market really runs. Like, again, do not be surprised. That's why, guys, we have to make sure that we're trading off of supply and demand zones, not just random levels of structure, right? Because I guarantee you price will come down to, and I mean, being fully transparent, price could really realistically go up from this level, right? It really could. The market's going to do what it wants to do, right? We don't have no control over what price eventually does. Like, we really don't, right? But more times than not, we'll see stuff like this occur, okay, where price does come down to an obvious level of structure to go ahead and entice people to get in, only for them to be used as exit liquidity. They go ahead and get their stop losses ran. Everybody gets stopped out. But us, everybody on this call right now, all 170 plus of us right now, we're not going to fall for this fake out. We're not going to fall for the trap. We're going to just wait for price to come right to the demand zone, be very, very patient, and then we're going to get involved when smart money gets back involved. Oh, man. Family, I know this is some sauce. I know this got to be some sauce for you guys. This has to be some value for y'all. Because this is exactly how the game is played. It's literally a game of manipulation. It's a game of enticement. And when you understand how to play the game, it really changes everything for you. But you have to be aware of these things. You have to be willing to understand it. You have to have patience and not get enticed, and really focus on getting into markets at supply and demand levels. When you're able to do that, you're getting in at discounted and premium price points, which also means you're getting in when the smart money is getting in, which also gives you the best opportunity to give you the best risk to reward. This is that value right here. Oh man. Oh man. So again, just be mindful of this stuff, right? When you have awareness of it, now you're able to take advantage of it. But now it's just all about developing that patience and that discipline to identify these things. So this is what I would be looking for USDCAD, right? Now, again, just to be fully transparent, what happens if price actually breaks its demand zone? Right? Well, again, it is possible, right? Everything in this market is very possible. Like, again, the market's going to do what it wants to do. But if we have enough momentum to actually break this demand zone, then that means we're probably going to see price come up into this zone again. It's not going to be a demand zone anymore. Then it'll end up just being a flip zone. And then at that point, we'll probably end up going and write it down all the way to the next level down here, right? Our next area of demand. Okay, very simple how to play it. Now, matter of fact, what happens if price actually does something else, right? Because again, there's different scenarios that could occur. All right, again, I'm not gonna act like the trader guys that thinks he knows it all, because that's not true, right? I'm not gonna sit here and act like, oh, it's got to do this. No, it's not, right? The market gonna do what it wants to do, right? Now, what happens if the market actually does something like this, right? Where we do end up coming down, we end up breaking the demand zone, right? But then after price breaks that demand zone, we actually end up, coming right back above it with a lot of momentum. The key word there, a lot of momentum. Now, what happens if that happens? See, now if we break the demand zone, right, and then we come back in with a lot of momentum, then that could also trigger another move higher. That just means that traders and investors just found, a level lower than this demand zone to be more attractive, and they wanted to get it in at an even more deeper discount, right? So there's definitely a couple of things that can occur, and that's why it's very important, guys, to really just practice proper risk management and just be ready to read and react. Be ready to read and react, right? Now, that's what happens, right? So again, we got to be aware of these things, guys. So again, for me personally, though, what I think can happen for USDCAD, I do see a correction to come in. I would love to see price come down. I'm very interested in looking to buy at around the 1.29 level. And then from there, I'll really go ahead and expect, more upside first, personally speaking. So that's USDCAD. Hopefully, I really provided you some value. Let me see. Kaylease, I think I said your name right, hopefully. Right, I apologize if I didn't, but hopefully I gave you some value on what I think can happen for USDCAD, because I did just go in on that. All right, let's go take a look at GJ. Let's see what we got here. So I realized that Forex Factory has usual effect. It's always actual greater than forecast is good for currency. Is that always the case? Not always, no. All right, now it's good for the economy. All right, it could be good for the economy, but being good for the economy is not always good for the currency. Let's see, flip zone. Yeah, exactly. All right, retest and break. Yep, break and retest. Yep. What confirmations do you see to enter your trades? Right, typically is more so just identifying how price is playing off of these key levels. Right, so more so, obviously, you know, reading candlesticks is very important. You know, if you guys have not looked into the Candlestick Bible, I highly recommend you guys to go ahead and read that. The Candlestick Bible pretty much really just breaks down like almost every single candlestick pattern, whether the reversal patterns or continuation candlestick patterns are all there. But yeah, you know, obviously looking at candlestick patterns is key, but it's more so not even just the patterns of the candles, right? It's definitely more so of the overall structure pattern that's being created that I look for. Not necessarily the candles, because candles are also very manipulated, but it's price action in itself. Right, what is the price action doing around my key levels? Right, when price action is really showing, you know, some type of evidence of going in my direction, that's when I really typically like to get in. All right, I know that that's probably not a very clear answer, but again, it really just comes with just putting in the work and the time, and then you eventually learn some price action patterns that make the most sense for you. Let's see, gold buy or sell. Right, I could take a look at gold. Actually, we already looked at gold. And gold is just hard to say right now, obviously, because gold itself is it's just been getting destroyed against the dollar, right? And I'm not the one that's going to say, oh, it's going to rebound anymore. I've been looking for buys on gold just because it is that safe haven type asset. And typically during the market conditions that we're experiencing, it does actually increase in value, but we have not been seeing that at all lately, you know, where we just been seeing it get destroyed against the dollar. Obviously, you know, that was brought up in the chat earlier, that whole situation with Uganda, right? And the massive supply in gold that was found can obviously definitely go ahead and cause this to actually happen, you know. But there's a lot of different things, right? You know, that could cause gold to really just continue to lose value. But overall, my guess was probably just continue to expect eventually more downside overall. You know, we're probably going to see a pullback first. I wouldn't just sell it from right here at all. If I was looking to sell gold, it's going to have to be, you know, at some type of a supply zone. So either up here at around 1770s, right, or even up here, you know, at around the 1800 levels, right? So that's where I will be looking to continue to sell gold. And if price breaks those levels, right, if price breaks back above 1800, then I'm going back bullish for gold again. Let's see. To understand smart money, you have to understand market structure. I mean, that's what anything, right? Not just smart money. To understand any strategy, in my opinion, you have to understand market structure. OBs, FVGs, and supply and demand are key, 100%. If you don't see the liquidity, you are the liquidity, 100%. I agree with you, right? I agree with you. Okay. But yeah, that's gold. Let's go take a look at pound yen. See what we got going on here. Pound yen, for the most part, guys, really has been range bound over the past couple weeks. I've been really calling for pound yen to reach all the way up to around the 175 level, and I still am very much still holding that target. I still see a lot more upside for pound yen. You know, again, I really want to see price come up to this 175, 176 level. So it's just a matter of being patient now and seeing what price really wants to do. But overall, you know, we really just been going sideways over the past couple weeks for the most part. But we are starting to see, again, a lot of rejections down at these areas of structure right around here, right? We're starting to see clearly a lot of demand starting to pick in these areas. And I think there is an opportunity for price to really go ahead and finally start to rebound, you know, for pound yen. You know, if my guess or my prediction is that we do have an opportunity to really see price go ahead and really rebound and go higher. Right now, obviously, we are going to have to break various levels of structures before we see that. But overall, it is very possible for price to actually go ahead and do that, right? For us to see price really go ahead and continue. So what I would be looking for going into tonight, again, I'm going to be identifying obvious level, or not obvious, but I'm going to be identifying areas of supply and demand All right, we do have a demand zone right here where price could come down to, and this is something that could probably happen really very recent, like soon, within the next few hours. And then from there, I really want to see price go ahead and run these highs up here, right? I think that we have a good chance of actually running these highs, especially because now at this point, a lot of people are probably thinking, that this is a good shorting opportunity. Why? Because in the past we were taught, man, look at all these rejections, man. The more touches to a resistance point, the stronger it becomes, and that literally makes no sense. I spoke about that on the boot camp as well, how that makes no sense, right? The more touches to a level does not signify that it's a stronger level. It just signifies that it's a more visual level. And since it is a more visual level, we also have to realize that that can also be an area that is going to be manipulated, right? Shout out to Big Real Tev as well for subscribing. I appreciate you. You definitely were dropping some gems in the chat as well, right? But yeah, again, so don't equate touches to a level, guys, for strength of a level, right? Just understand that it makes that level more visual, right? It makes it more visible, and more visible it is, the more likely that is probably going to be utilized as an area to collect liquidity and collect orders, and it's going to be an area that eventually gets manipulated. So I think now there is a very good chance for price to actually go ahead and rebound, or probably test down here at around the 161.8 level, and then from there we really see some upside, guys, for pound yen, especially with how price action is playing, right? I mean, we had this level of structure right here, right? This level of structure right here that pretty much was holding as a level of support. Price ended up running that support pretty aggressively, right? Found an area of demand, and then we seen a massive move up. And then again, very simple, guys, like you have to learn how to read this type of price action, right? Like all this type of structure right here that's being created, right? Like this level of support, right, got ran, right? This level of support was created. We've seen a massive run up, probably entice people. Price came back down and even ran that level, right? So now we went from creating these lower lows, lower lows, lower lows, to now seeing price shift momentum, and now we're starting to create these higher lows that are being created, right? So going from lower low structure points to now seeing higher low structure points, that is again evidence showing that price could realistically really start to give us a deeper pullback. So my opinion going into tonight, and I could be wrong, and if I'm wrong, I don't care, right? It really doesn't bother me when I'm wrong, right? Every single trader is wrong. I'm very, very fine with being wrong, especially if I'm wrong based off logical ideas. Okay, I say this all the time, guys, right? There's a difference between a good loss and a bad loss, right? There's a difference between a good analysis and a bad analysis, right? Right now, my opinion of it potentially going higher, that's actually a very logical idea based off price action, based off structure, based off a change in momentum and all that. So if price was to say continue to drop, then it is what it is, right? It's out of my control, right? And that's something that we spoke about on the bootcamp a lot, right? The controllables versus the uncontrollables. We need to focus on the controllables and not the uncontrollables, right? What price actually ends up doing, that is out of our control. So I don't care about what actually happens. What I care about is making sure that I'm creating a logical idea, a logical base situation, and taking advantage of that. So looking for a buy down here is probably not a bad opportunity, right? And then we can go ahead and target, back up to areas of supply, which is going to be up here, this area, and then we can also possibly target even the higher level up here, where we do got this area of supply that was all created, right? So, that's something that's very, very possible for pound yen. That's probably what I'm going to be looking for going into tonight. And yeah, we'll see what happens. If it does go in that direction, amazing. If it doesn't, amazing. It doesn't matter to me personally, because I really manage my risk correctly. So, but overall, that's what I will be expecting, guys, for GJ. It just looks like this thing definitely wants to possibly really start trending, back to the upside. Let's see what we got here. Love you, bro. You have a good skill for teaching. I appreciate that, Babar. I really do. Thank you. Did you learn from ICT? I did not learn from ICT directly, no. All right, but ICT did introduce a lot of people to the smart money concepts, so obviously the people that I learned from probably learned from him, right? So, but I did not learn from him directly, but he definitely is an OG in this space for sure. Let's see, during a ranging market, do you trade or wait for break and retest? That's a great question, right? And it really depends on your style of trading, right? I personally am a trend trader, right? I like to ride out trends. I like to go ahead and take advantage of trends when they're actually visible. But There also, the big benefit of trading ranges when you understand the overall bigger trend, right? There's nothing wrong with getting in some range bound opportunities if you understand the overall macro outlook of the market, right? Because getting into some range bound opportunities right before a trend starts is really probably the most optimal thing to do. Like I typically, again, I'm a trend trader, but if I see an opportunity to get in a trend even before the trend starts because I'm identifying structure, I'm identifying price action, then I would 100% do that. Right, because then I'm able to get in at literally at the bottom floor or the top of a trend. And if I'm able to do that, I'm riding the hell out of that trend until the end of it. Right, so typically, again, I am a trend trader. That's what I usually focus on. But if I see an opportunity to get involved into something that's in a range that's about to trend because of structure, I'm still in that all day long. Let's see, is that a head and shoulders on GJ? Typically, you can say that. Again, I'm not too big of fans of these patterns, but yeah, typically you can say that, right? We have, left shoulder, head. Right now, we got this whole right shoulder that's being created, right? Yeah, so. But yeah, this is not bad though, guys. This is actually not a bad looking opportunity here for GJ. I'm expecting more upside, so maybe something like that. He pulled back down to structure down here. He pulled back down to more so this. Excuse me. Right, a pull back down, maybe down to this area of demand, could possibly actually play out, going into tonight, going into tomorrow. All right, and if we're wrong, it is what it is. That's why we practice proper risk management. All right, so that's pretty much where we're at for that as well, guys. But overall, those are the only ones I'm really going to be looking at going into tonight. UJ, I really want to see UJ continue going to the upside personally. It's just seeing how we actually react off of these areas of supply and demand, or these areas of demand more than anything, because we can easily play off of the level that we're currently at right now, all right, which is an area of demand. We can see that by how price continues to react off of there, or price might want to give us sort of a deeper correction down into this 135 level, and then from there we might be able to go ahead and catch a rebound and also go higher. But I'm definitely still very much, bullish the dollar as a whole, guys, right? We have to understand, again, sentiment is very important, right? We have to understand exactly what sentiment is doing, and I believe that we're still very much risk off sentiment, right? And when we're in a risk off environment, the dollar is going to continue to appreciate across the board against every single asset because it's a safe haven, right? Risk off sentiment, which usually is happening during times of fear, uncertainty, and doubt, during times of chaos, that definitely happens, where the dollar continues to benefit. So I'm still very much bullish. It's just a matter of now just waiting, right, and see what price wants to do. If you think that this level of demand right here is going to hold, then hey, go ahead and take advantage of your setup. All right, take advantage of your setup. Or if you think demand is going to come down here and hold, then that's another way to do it too. Just take advantage of it and set it up and make sure you practice proper risk at the end of the day. All right, shout out to 20 Pips Savage for the $2. I appreciate you. UGX, right? Let's see what UGX is, right? What is bars even here to even look at? The Ugandan shilling, right? This is by far the first time that I have ever looked at this, right? But I think you're saying to look at it because of the increase in value is my guess, right? Like, look at how this thing just absolutely just, like, it went from down here all the way to down there, right? I mean, how many pips is that? Right, so what, 170 pips? Is this what you're looking at, 20 pip? All right, because if this is, then yes, it's a very interesting thing to look at right now. Let's see if there's a little bit more of a clearer chart. All right, yeah, there's not even going to be that many. All right, so here we go against the euro. Excuse me. All right, here we are against the euro. Very interesting, right? We're here against the euro. This is a very interesting freaking pair, man. Like, I don't even know what made you even want to look this up, the Ugandan shilling. But yeah, this thing clearly did increase in value like crazy. Right, but let's see. Are you invested in Bitcoin? I see it on your screen. I'm definitely a very, 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 very big supporter of cryptocurrencies. But obviously right now, I wouldn't recommend obviously getting in just yet. There's a lot to these cryptocurrencies, guys, that a lot of people are not aware of. The first thing and the main thing is probably going to be obviously the actual halving cycles that, you know, make up, right? That make up these cryptocurrencies, right? You know, every 4 years they literally repeat a cycle based off or based around Bitcoin's halving. And right now, I still see a lot more downside, guys, for Bitcoin, right? Like I would love to see Bitcoin down around the $14,000 range, you know, and I believe sometime next year, near the end of next year, is when we finally really start to bottom out, and then we, you know, go ahead and start to make our way back up to the upside. That would be my bet for Bitcoin, right? We finally see price come down to around the 14K level, 15K. From there, we actually range bound for the next year, and then eventually we go ahead and really see this thing start to pick up, and eventually go ahead and break these highs and go to 100K, and then $1 million, and then so on and so forth, right? But I am very much a big supporter of these cryptocurrencies. It's just right now, I'm not going heavy in this at all, right? I'm not going heavy at all whatsoever. It is still considered a riskier asset, so just like anything risk off, we want to stay away from the riskier plays right now, right? So that's where we're at with this one, guys, for Bitcoin as well. Right, but yeah, overall it doesn't look too bad though. You know, if we can get down to 14, 15K, that's when I really start accumulating for the next bull run. Let's see. Yeah, I think it's because of the gold find. Yeah, it probably is. Obviously, you know, I mean, imagine if your country had just found that amount of gold, right? That in itself is definitely going to cause, you know, for a lot of a boom in your economy for sure. 100%, 100%, right? It's probably what it is, right? But overall, guys, again, let's just be very mindful of what we're going into tonight. I'm a very big fan of looking to buy GBPJPY. This is probably gonna be the opportunity I'm looking at the most tonight. You know, looking for some buys down here at this demand zone, maybe something like this, and we'll see what happens. I'll probably end up setting a pending order and seeing how price ends up playing out for this one. But overall, it doesn't look bad. You know, if we're able to come down here, then yeah, I'll definitely be very, very much comfortable going ahead and getting into some buys. But overall, family, I do appreciate y'all. You guys know I love y'all so much. Without y'all, I would not be able to do this. I truly appreciate all the support, all the love y'all been giving me, and I continue to provide. I look forward to continue to provide you guys with massive, massive value as well, and just really continue to be one of the voices of YouTube in terms of Forex. Right, that's really my goal, is to really go ahead and become one of the best YouTubers, Forex traders in this space, and I can't do it without y'all support. So I appreciate you guys. I love you guys. Thank you guys for rocking with me. If you guys do want to be a part of my boot camp, and when you get way more in-depth information than what I'm just providing you guys right now, all the information is in the description down below. It's gonna be the first thing that you read. Make sure to go ahead and fill out that form. Make sure to send me an email to the email that's in the form as well, and make sure to lock in your spot as soon as possible so that you can go ahead and secure that spot. But family, I do appreciate y'all. I will be back on tomorrow as well, same time, same place. We do go live every Tuesday, Wednesday, Thursday at 10 p.m. Eastern, and it's all about providing you guys with massive value, and I look forward to continue doing that. So I appreciate y'all. I love you guys. Shout out to my guy Big Bird as well in the building. I appreciate you, bro, and I look forward to seeing you guys all tomorrow, guys. Have a great rest of your guys' night. Let's get it.